Look, I found the president's comments just now very disturbing. I think there's something depraved about his degree of dictator envy, his idea that somehow the fact that we have an independent central bank, one of the stronger financial traditions that the country has had and that free countries all over the world have moved to, the idea that that's some kind of impediment, I think is really a very, very dangerous idea. I think the president's efforts to politicize the Fed actually make it more difficult for the Fed to pursue easy policy, because if they do, there will inevitably be the sense that they're sacrificing their institutional independence to the wishes of the president. It's no secret I have felt that Fed policy should be easier for a long time, and recently wrote that the Fed should be moving towards easing quite quickly. But the grounds that the president offers, I think, are entirely misguided. This kind of public pressure coming from a president is likely to be counterproductive. The impact of it is likely to be to reduce the credibility of the Fed as an institution. That over time will mean higher capital costs for American businesses across the board. So I can't say I was surprised, but I was saddened by the president's comments today.
But Secretary Summers, I guess the president does have a point simply in the fact that he states that President Xi can do whatever he wants when it comes to monetary policy and it is indeed pumping money in. And at the same time, you're saying that you agree with the president that the Fed should have slightly looser policy than it does.
I think on balance, given the risks in the economy and given the absence of inflation pressures, that the Fed should be tilting towards easing in coming months. Yes, I think that the kind of expectation that the market has for significant rate cutting over the next while is represents an appropriate policy, and it's the market's judgment that that's the policy that the Fed will adopt. But no, I don't think that China's economy is somehow being rescued by the pumping in of money by its central bank. I think, yes, President Xi has lots of powers that President Trump doesn't have. President Xi can censor the press. President Xi can throw his political opponents into jail. President Xi has very substantial authorities that President Trump lacks, but that's not an argument for giving those authorities to President Trump. The fact that we are a nation of law, not a nation of rule by a single political party dominated by a single individual, is one of the great and immense strengths of the United States. And for the President of the United States to suggest that that is somehow a weakness is undercutting what is our greatest asset, the power of our example around the world. It makes me very sad.
Secretary Summers, I know, we've talked to you many times throughout the trade fights between the U.S. and China. Things have only escalated. How then do you interpret a market that is sitting less than 2% from record highs when things have only gone from bad to worse between the U.S. and China?
I think that the market right now is more optimistic about there being a deal than it has been at some points in the recent past. I think that the market has recognized, unfortunately, that the American strategy seems to be huff and puff and concede. That's the strategy we have just adopted with respect to Mexico, where the great ballyhooed agreement turns out to comprise things that were mostly agreed months ago, along with some fantasy agreements in agriculture that the Mexicans don't recognize actually exists. And so part of the market's strength is that they recognize that for the near term, this is a lot of screaming, and then there's a fair-sized chance that we'll just concede. I think the markets also recognize that for the vast majority of U.S. companies, they're not actually affected that much by entry into the Chinese market, and they're not actually affected that much by the tariffs that are placed. I also think that what's noteworthy in a way is not so much the market's strength, but that in order to generate the market's strength and in order to keep the market stable, it's been necessary for the Fed to signal that interest rates are going to fall well below 2% in a healthy, in an otherwise healthy economy. And so the market's performance is, in addition to discounting the fact that the president won't likely do the things he bluffs about, is also a reflection of the fact that, given all the uncertainties, we've come to rely on a liquidity-driven economy, which is really quite ironic given the president's commitment to to working people and to supporting the heartland of America. In fact, what we're having is an economy that's supported by low interest rates pumping up asset prices, and the expectation of low interest rates pumping up asset prices.